one of the things, Dunnigan, that marks the difference in this industry over years past is we've talked about it before. We like to use euphemisms and metaphors, and we talk about how for years we were preaching to the choir. We were speaking to the people who had been involved in hard assets and precious metals for a very long time. And since 2020 that we have expanded, we talk about into the audience and even across the street, a larger swath of people have come into this industry over the last couple of years. And I think that to a large degree, many of the people who came in late came in with intentions of making a profit. And look, anytime you make an investment or buy an asset, you expect it to appreciate. And in an environment that we are seeing with massive runaway inflation, with geopolitical problems, war, with political issues, moral and social issues, and all of the things that are all coming together at the same time, one would expect that this would be the environment that precious metals would excel in. And I think that a lot of people have become a little bit disenchanted, perhaps, with the lackluster performance of gold and silver. Now, look, the bottom line is simply this. Is it lackluster? Let's talk about gold for a moment. When you look at all of the major asset classes, you look at like Bitcoin down 35-40% for the year. You look at the FANG stocks, Facebook and Apple, or Amazon, Google, Netflix, they're all down between 30 and 60%. You look at the Dow, the S&P, the NASDAQ, they're all way down. Gold and silver, certainly, and in particular, in this case, gold, it hasn't made anyone wealthy, but it's held its own. And I think in the environment we are about to find ourselves immersed in, he or she who loses least wins. Now, I would also like to say this. Look at the extent to which the government has distorted the economy with inflation, and where asset prices reach astronomical levels, counterintuitively, if you will. I think that gold and silver represent the canary in the mine shaft, and I think there is a concerted effort by the powers that be to not let gold and silver explode higher. Now, I think at some point they're going to have no choice. I think at some point the market is going to do this on its own, and to the best intentions of the central planners who would like to keep the price muted, because what rising gold and silver signal is trouble with the currency, trouble with the economy, trouble with the system, the whole Western system. And I think we're at that moment right now where they're really trying their best to keep the dollar's main challenger, which I look at as gold and silver, muted on the sidelines. Now, we can get into why I think later this conversation, why I think that's going to prove futile. But what I would really like to get across is that I think there is a concerted effort to keep gold and silver in a tight trading range. And people are tired of waiting for this breakout that should have already happened. Look, I've been doing this a long time. I'm tired of it too. But I've always said that gold and silver are not an investment, they're wealth. And in a period of time like we're experiencing right now, you need to remind yourself of that. You need to look at all the asset classes, which are down substantially, and yet gold is up a little bit. And that hasn't made you wealthy. But remember, in a deflation, depression, and I know we're in massive inflation, but I think what we are going to witness is perhaps a very, very substantial recession into maybe the greater depression eventually. You'll have a Fed fight it with inflationary policy, of course, but the bottom line is, in the environment we are heading into, he or she who loses least wins. And I need people to understand that you don't buy gold and silver to get wealthy. You own it because it is wealth. And I think there are a lot of people who haven't really grasped that yet. And they're like, hey, if it isn't going to go up now, why would it? And that's something, yeah. And that's something that I think is fair, but I also think will have its time. And I think people are just a little bit, they're a little bit disenfranchised, if you will, by the lackluster performance. And I understand that, but be careful what you wish for when gold and silver finally do express themselves. And I really do think they will. It's inevitable. Be careful what you wish for, because that will be at the expense of stocks, bonds, real estate, perhaps even cryptocurrencies as interest rates rise. So we can get into that, but this is just normal human emotion. I also like to mention that I look back over the last decade, May is our worst month. Every single year, May is the worst month. People are, hope spring eternal. They're getting outside, they're planting their gardens, they're playing golf, they're, if you live up here in the north, of course, I moved to Florida, but I'm back in Minneapolis where I spent 50 years. And look, the minute you get 40 degrees up here in Minnesota, you start, you see people with their windows down and short sleeve shirts. So by the time you get decent weather in May, no one wants to sit at their computer and think about metals. It'll all come back around. This is just a slow period, and it is what it is. Nothing's changed. That's the bottom line.
A couple of things you mentioned there, I wanted to give some pictures because it jumped right to my mind when you said some of the more recent entrants into those who have been stacking metals might have been thinking they were buying something to flip it for a quick profit. And we have a comment on that very point, and it brought up in my mind some charts that I saw from Egon von Greyerz recently, and I want to show those. Troy Lagalbo says in the chat here, some people's brains are wired backwards, lawful. They see the paper as money and the gold and silver as a type of investment. Yeah. So that's backwards. And I wanted to share this. See if you can tell me if you guys can see this. Yeah. Okay. So here, this chart put out by Gold of Switzerland, Egon von Greyerz, and the 100 line across the top here says gold is the straight line at 100, constant purchasing power. And then it's about 120 year chart on the bottom that shows all the major currencies of the world and what their purchasing power, all starting out from the 100 as a baseline, what happened to those over the last century and 20 years. And you can see currency after currency after currency has just plunged from 100% purchasing power that it had back in 1900 at the turn of the last century to just they're all down in the mud at approximately 2% or less. Some of them have just gone away, like the Deutschmark there in the 1920s, in the Weimar Republic, and so on. And then there's another chart that also drives the same similar point home. Unless you want to comment on this, feel free. As
far as that chart, look, the death of the dollar, the death of money, the death of currency is a slow process, and you can see it takes place without people really noticing. It's one of these deals where it's insidious, and you can look. There was a man named Dr. Franz Pick who said all currencies inherently are meant to die. Every paper currency that ever has been has died, and that's because politicians always choose inflation over austerity, and they will do it this time too. They're talking a big game. But the Fed can't raise rates. They don't want to be responsible for blowing up the economy. They'll raise them enough to create some strain and some pressure and some pain. And as I've talked with you and others over the last year, I really do believe that the weaponizing of the dollar, the pushing the Russians out of SWIFT, the deteriorating relations with Saudi Arabia, look, you have a growing interest in selling, whether it be energy or armaments for other currencies outside the dollar. And then you have the U.S. perceived lack of support, I think, for the Saudis' intervention in the Yemen civil war. You have the chance of U.S. getting back into the Iranian nuclear deal. These are things that are greatly upsetting the Saudis. And when you realize that the only thing that makes the dollar the world reserve currency is its protection, is our protection of the Saudi kingdom since 1974, which is now being challenged by Russia and China in joint military cooperation agreements, in selling oil to China in yuan instead of in dollars. This is a break from the dollar hegemony. This, to me, is what will tip the scales. The Fed talking a tough game, I think, is jawboning. I think the market will do it for everybody. And I think this is the scary thing that people need to understand about precious metals. It's the same thing about, you know, paying the premium on your home insurance. You don't come home and say, darn it, my home didn't burn down. I paid my life or my home insurance the other day. It's the same thing here. I do believe that we've set a fire globally and the dollar is going to burn. And I think it will emanate primarily from the dollar's loss of the petro reserve status. And when that happens, interest rates go to the moon, and everything that is sky high, stocks, bonds, and real estate, are all inversely correlated to a rise in rates. And that's when you see the importance of owning precious metals. And I think people need to understand this. It's wealth. It's not to get you wealthy, because when you become wealthy holding precious metals, it will come at the expense of everyone around you and everything that was good about living in this country. And so, look, you know, the most depressing part about my job over the last 2 years is feeling this way, because for my whole career, I always viewed gold and silver as wealth, something I've accumulated every 2 weeks for 33 years as a promise to my father when we started this company together in 1989. And so I've always viewed it as wealth that I hoped I never need to use, that I would give to my kids someday. And I would be glad if I needed to use it for an opportunity or an emergency. But if not, it's a way to pass money on outside of probate, very privately and securely. But where we are right now, I think we are witnessing something that no one has witnessed in several generations, and that is a move away from the dollar as the singular world reserve currency of the world. And I really, truly do believe that you could argue that it was an intended consequence, that the central planners realized that we are so far down a rabbit hole that if they didn't do something like weaponize the dollar, kick the Russians out of SWIFT, steal their money, impose sanctions, do all of these things, that we would end up, they would end up, or we would end up in a very, very, very bad place. And I don't think they want to be the group that is responsible for breaking up, or blowing up this economy. Instead, it will be an enemy. It'll be a scapegoat. It'll be the Saudis. It'll be the Russians. It'll be the Chinese. And I think it's important to remember that, you know, the countries representing the sanctions, Europe and the United States, only represent 15% of the world's population. But the countries that are representing 85% of the global population, China, India, Africa, South America, they're all still trading with Russia. And so the sanctions are meaningless. But what you are seeing is a move away from the dollar hegemony, where 85% of the world says, you know what, screw it. I'm going to trade with whoever I want to. And I think by weaponizing the dollar, all of these other countries are thinking, are we next? So you've incentivized 85% of the world, let alone the Belt Road Initiative, which is Asia and Africa, 70% of human population, or even a little greater, are moving away from the dollar. That is where I believe in my heart that it all hell breaks loose. And all it would take would be for OPEC to say, listen, we have burgeoning relationships with Russia and China and South America and South Africa. We've decided to open up oil sales to several other currencies, and bang, like that, all those dollars come flooding home. Remember, 15% of the world's population in Europe and America, 85% in the rest of the world, and every single country on the planet has owned dollars, really, since 1974, for sure, when it became the petrodollar. You have to own dollars to buy oil. Well, if that changes and all those dollars come flooding home immediately, if you think inflation is bad now, wait until you see a global dumping of dollars. And then what happens when that happens is interest rates spike to the moon. The Fed doesn't have to do it. They have a scapegoat, and all of these asset classes that are inversely correlated to that event collapse like that. This is why we own gold and silver. And for people who are bummed out that it hasn't taken off yet, I just simply say, you're looking at it the wrong way. It's on sale. And if something that you want to continue to buy and accumulate goes on sale, then that's a good thing, because the mathematics and the economics and the logic behind this, in my mind, don't again signal an inevitability of the dollar losing its singular world reserve status. And that is the only reason, in my mind, that it really doesn't matter today what the price is doing, because ultimately it is, I don't see another life raft other than gold and silver when this happens. And I'm also mentioning cryptocurrencies because you have so much participation on Wall Street in cryptocurrencies. And if you look at how they're tied together, the way the S&P, the Dow, the NASDAQ, the way they all move in conjunction with Bitcoin and other cryptocurrencies, it's amazing, the correlation. So I would simply say to you, there are very few places safe to put your money now as this unfolds. And I do sincerely believe that the Fed will only perhaps maybe light the fuse. But I think the real problem, the real issue is the dollar's loss of world reserve as Saudi Arabia and OPEC move away from the dollar. And I think that's coming.
In concert with what you just said, we have a comment here from Frederick Newcomb, known to his friends as Rick. He said, I had IRAs, fiat, retirement programs, and investment programs, but until I learned and cashed all that in on PMs, I never had any wealth. It's not huge, but it's real. And I wanted to share that other chart I promised from Egon van Greyerts here, and see if I can get this up. Tell me if you guys can see this one. Are you seeing a share?
Just everybody? The top half.
Top half. That's not helpful. Okay, hold on. How about this? Is that
Yep,
better?
there you go.
Okay, so the big blue line here is gold. That is the nationwide house. This is the UK data. So in the UK, nationwide housing prices priced in gold. So if you start with a baseline of 100 there in 1953, it basically goes horizontally up and down, but always around a level back to still 100, so that no significant change in how much housing or real estate house pricing in the UK you could afford for gold. Whereas the green line here is the pound, the British pound sterling index, and you'll see that it disconnects from the gold line here just before 1970, 1969, and it takes off. And if you notice, this is a logarithmic scale. So what used to be a 100 correlation, then it breaks through 1,000 to 1, then it breaks to 10,000, it's above 10,000. So when you're holding precious metals like gold, they're holding their own against real things.
Let me try to tie that. Now this I hope this doesn't come out sloppy, because I used to talk about this a lot, and I pulled these numbers from the Census Bureau probably 7-8 years ago. So I'm a little bit off with the numbers, but I'm going to try to remember, and I'm going to use it exactly what you're saying, but bring it home here in the US. You know, prior to 71, when we left the gold standard, gold was fixed at a rate of $30 or whatever it was back then. Governments could trade in their US dollars for gold at a fixed rate of $30, $35. I'm sorry, I'm not exactly sure the number. But so if you go back to 1960 in the US and you look at the average price of gold, which was, I think, like $35 or $39, and the average price of a house, if I remember correctly, was $17,000. So let me do the math here real quick, because I think I can tie this in. 17,000 divided by, let's call it 39. That's 435 ounces of gold. I think it was $39. So anyways, you'll get the point. In 1960, if you had 435 Krugerrands or $20 gold pieces that your grandfather left you, you could have used it to buy a house. The average price of a house in 1960 was $17,000. And 435 ounces would have bought it for you. So if you decided to put it in the attic and not touch it and take out a mortgage or find a way to pay for that house, and we look at where we are today, those 435 ounces of gold today represent over $800,000 and $850 maybe. And so you look at the average price of a house right now, it's probably half that, 400, 300. So when you talk about gold since 1960, so for for 50 years, earning 60 years, earning nothing but dust, no interest. Gold has not only held its own in relation to house prices. That stack of 435 ounces of gold would buy you 2 houses today, maybe 3. Whereas the $17,000 back then wouldn't even buy you, furnishing for the house. So the point of it is that whether you're talking the UK or the US, gold is the barometer. Gold will hold its purchasing power as the dollar insidiously loses value. Going back to that very first chart you showed, where the dollar loses its purchasing power precipitously. They tell us, well, it's a 2% per year. I mean, bottom line is that, look, at 2% per year, the law of 70 seconds tells us in 36 years, it's cut in half the value of the dollar. So what happens at 8%? 8 into 72 is what? 9 times 8. 9 years at 8% inflation, the dollar loses half or loses half of its value. So the bottom line is that gold is there because it is wealth. It is not there to get you wealthy. And when you use it to measure against something like a home, whether it's in the UK or the US, even though that asset earned no interest for 60 years, you can see how it maintained your purchasing power and in fact actually increased it as the dollar has accelerated its loss in purchasing power. So it's a valid point, and it's one that I think people should think about as they accumulate precious metals, not to get wealthy, but because it is wealth that has outlived all of these market cycles, that has outlived pandemics, that has outlived 2 world wars, that has outlived German hyperinflation and the Great Depression. So there are very few, if anything, that you can say, assets anyway, that can say that. And so I understand, look, it gets tiring. Listen to people like me say this, well, have patience, it's going to happen. This is a high stakes game. And the players that are pulling the strings understand this. You're talking about a shift from perhaps the US as the world reserve currency and the center of free trade of the universe to it not being. And I think this is a big deal. So you're talking a repositioning of an ocean liner, not of a speedboat. It's going to take a long time, but when it does turn, it'll turn and it won't come back, I believe, as the wealth, the real wealth, is moving eastward. If you look at the amount of gold that the BRICS nations have accumulated, Brazil, Russia, China, India, South Africa, I mean, these are the big gold accumulators. Gold's now tier 1. And I really do believe with the central bank digital currencies that the BRICS nations, on the back of the Chinese digital yuan, which is already approaching 10 billion in transactions since last year in China, just on the digital yuan, they will use that technology, and they might even piggyback on top of it and issue a gold peg to a central bank digital currency that will immediately challenge the dollar for world reserve. And as I said before, there's your great reset. There comes a massive dumping of dollars, a spiking of interest rates. There's Schwab saying you'll loan nothing and be happy because everything collapses. and I think that's coming. I really, truly do. To one extent or another, I do believe you will see a shift away from the dollar, and it will move towards the east and a currency system backed by assets, not backed by a mountain of ever increasing debt, because it's very obvious that the Fed is backed into a corner. If they do really stay true to what they're saying and they raise rates and sell 80, 90 billion a month in assets, you're talking about the greatest depression of all. You're talking about blowing up the economy, stocks, bonds, and real estate vaporizing as rates rise. And does the Fed want to be, the steward of that? And that's the question. I don't think they do, but I think they've come up with a plan for a reset. And when you have $130 trillion in debt, most of which will never be paid, you find a villain, you weaponize the dollar, you create an environment where you could actually have a reset. Everything starts over. You come in with a new central bank digital currency, and maybe they too will peg it to gold if the gold held at Fort Knox is really actually there. I don't see a way around it. And this all circles back to the reclassification of gold as tier 1. Why in the hell would the Bank of International Settlements have done that if it weren't for it to be central to what's coming next? And I do think that is coming next, a system backed by gold. It will not be convertible because Charles de Gaulle proved that convertible currencies convert, as he tried to drain all the gold out of the treasury. But at the same time, I think it will be pegged to a new currency, whether it be a BRICS currency, a digital yuan, or the dollar, with distributed ledger technology.
Sorry.
Which will show the immutability of the gold and the veracity of the gold being held backing the new currency system, and will immediately inspire confidence. And I think it's coming, and ultimately will come here to the US as well. But this is why you own gold and silver. It's not to get wealthy. It's because this is the type of environment. It's the perfect storm. Inflation roaring at all-time highs, debt at all-time highs, war in the Ukraine, the moving away of the dollar as the petrodollar, deteriorating relationships with Saudi Arabia, with China. I think we are entering a period of time that is unlike anything anyone in this country has seen, maybe ever. And I think it's important people kind of recalibrate the way they look at precious metals, and don't get bummed out right now because the inevitability of this happening. It's going to happen. Either you see inflation roar, or you see rates rise enough to break inflation, which blows up the economy. One or the other. Both are unpleasant scenarios, and I don't see the ability of a soft landing. Heck, you're getting all of these bank CEOs like Jamie Dimon coming out and saying there's a hurricane right outside our window. And I think it's true, and they realize it. And how it happens, when it happens, don't know. But this is why you accumulate gold and silver as often as you can. This is why I've been buying it every 2 weeks. And if I have to use it, I'm damn glad I have it. If not, it goes to my kids. But I will tell you, in my heart and in my soul, I believe we're going to have to use it to some degree or another, as the dollar is precipitously losing value. And I think we ain't seen anything yet, truthfully.
One of those evidences of the dollar's loss of value and destruction of purchasing power is inflation of the bubble, the everything bubble, including the stock markets. Rach McD says, does Andy think the stock markets will have another melt up?
Maybe. I mean, as they try real hard to inflate the dollar, maybe. But no, I mean, look, ultimately rates have to rise. So maybe there'll be a brief moment where you see a melt up. Look, I've been wrong about stock melt ups for a long time. I'll be the first one to admit it. I'm always early. I've been way early in this, and I've missed out on a lot of gains. I think when I'm right, ultimately, I'll be glad I didn't participate, because it's hard to back away from making 40 years worth of gains in the stock market, or just go back to 2008 and look at the gains we've seen since then. Look at the balance sheet increased by the Fed at the same time. It was 800 billion in '08. It's 9 trillion right now. Do you really think there's not a coincidence in this make-believe, illusionary valuation world that we live in, where the Fed has pumped so much money and distorted asset prices to such a degree? I find it comforting that the distortion in asset prices hasn't affected precious metals, actually, because I think it explains a lot why they're trying to hold it down. It explains they've juiced everything up to a level to keep the game going. But what is going to stop the game is rising rates. And when rates rise, that's when you see stocks find fair value, stock markets collapse. So could there be? Sure. Ultimately, I think it's going to go the other direction. And I think to wait for that moment is foolhardy, because I think it will happen very quickly. It'll happen on a Sunday night where you see an announcement by OPEC. By Monday morning, the markets will open up, limit down. And I think that will continue. That'll exacerbate. So pigs get fed, hogs get slaughtered. So if you do think that there'll be a melt up, you start to limit your exposure to the stocks and hope that a smaller allocation in a melt up would make you a nice return without risking the base of your pyramid to the potential. And I think that the potential for a market meltdown ultimately is far greater than a market melt up, because the Fed has, look, when I started in this industry in 1990, interest rates were at 9%. So from 9% to zero in 33 years, look at the run in the bond market. I mean, that's the biggest bull run of all time. And that has juiced the trillions of dollars the Fed has thrown into the system, has juiced the stock market, the bond market, the real estate market. But more than anything, has created distortions and misallocations where, look, I would argue that most of these stocks, the valuations are stupid. They shouldn't be this way right now. And if we do see a melt up, I could argue it would be the last melt up that we'll see for a very long time. And I don't think it's worth risking the potential of it going the other way.
There's a question here. You've mentioned gold in the role that it plays in preserving purchasing power. And we mentioned those charts from Egon von Greyerz that showed it versus fiat currencies, that showed it versus real estate. Jake Perigo says, ask Andy about gold sales. We've talked about silver a lot recently. What's going on with gold?
Over the past 2 years, which have been our two biggest years in 33 years, over 95% of every sale we've done has been in silver. Ultimately, I believe, and I've told almost every client who's bought silver from me, that ultimately I believe the place to be ultimately is in gold. And I'm sorry to Chris Marcus and to Vic Swear and to Wall Street Silver and all the folks who are huge silver bugs. I am too. I am. And I think it's the value proposition of a generation. But ultimately, you want to be in gold because of its tier one status, because of the massive accumulation by the central banks, because it will be pegged to a new system. But I think there are a lot of people who have jumped onto the silver gold ratio trade. And so the major drive, I'm sorry, I'm fighting allergies. I always had allergies back here in Minnesota this time of year, and my eyes are watering. I apologize. So the major drive has been in the value found in silver. And honestly, I don't think there's better value out there. So when people ask me, should I buy gold and silver? I answer it this way. Look, ultimately, you want to be in gold, but silver is a pathway into getting it at an 80-to-1 ratio. It's the value proposition of a generation. And so, yeah, I think the premiums on gold are quite low. And in fact, not much higher than they've been historically, because it's the forgotten monetary metal. It has been, as literally 95 or greater percent over the past 2 years, our biggest years ever, have been dominated by silver of all of our sales. So gold is the premiums are fair, but that can change pretty darn quickly too. We have seen, when someone comes in with a 6 or 7 figure order, very often it is dominated by gold. But even still, if it weren't for the logistics issues with silver, I would tell people 100% silver is the better value. But ultimately, I see a time where we convert to gold. Now, is there a flaw in that argument? Sure. That flaw would be maybe it becomes difficult to source gold when we want to switch it. But remember, I talk about the first time I started doing podcasts in 2010, we had an 85-to-1 ratio, very similar to where it is right now. And in 2010, that was the second time or third time in human history it had been that high, 5,000 years. And I told everyone, trade your gold to silver right now. Well, within 8 months in 2011, you had $50 silver and $1,915 gold. That's 37-to-1. So if you did that and switched back to gold, you made over two and a half times what you started with. That's what I mean about it being a pathway into more gold. And so, look, silver's a better value. Gold is only less than 10% from its all-time high. Silver's half of its all-time high or less. So gold, the sales in gold are nowhere near what they have been in silver. That'll change at some point, but 5% of our sales, 10% have been in gold, 90 plus in silver.